Hello, everybody. So I just want to spend a little time to talk about HIMS and marketing spend and marketing in general for the 21st century business. And this is important for me to make this video because on Twitter, I see a bunch of fear being spread about how much HIMS spend on marketing and about how we should not be spending money to acquire customers. And I entirely disagree. I typically view marketing as an investment, and we'll see why this is essential. Your view on marketing is essential. Do you think it's an investment? Do you think having customers is more important than, say, having money, right? Because you're giving up money to gain new customers. Do you want to give up US dollars to gain new customers, or do you just want to have crazy profits and no new customers, no growth? It's a very easy choice for me. Sometimes you have to pay up for quality growth. That's what HIMS is doing, but traditional finance doesn't see it this way. And I mean, that's mind-boggling to me, but that's okay. So let me just talk about HIMS. HIMS, of course, is investing in marketing. Look at how fast they're growing, right? 74% new subscribers and 83% revenue growth. We're talking about year over year, right, over the past 12 months. You don't get that type of growth without investing in your growth. The marketing is fueling the growth, and I suggest if you want to read the section of the call where the founder, of course, talks about the marketing strategy, it's a very holistic strategy. They do just about everything. They do TV ads, online ads, they do celebrity sponsorship, they do just about everything they can in marketing to propel the business. Marketing is essential to gain new customers. You don't become a brand overnight. You can't become a brand overnight. Every single brand, when they get started, they have to invest in marketing so that we know who HIMS is, right? This is a new company. This is a company that's 6 years old, and the fact that this company is already this famous, I think is wonderful. But investing in marketing is essential when you're a growth company, and I view it as an investment, and I'll show you some of the back of a napkin math. But let me first get started by telling you from a conference call, we know that they spend 51% of their revenue on marketing. It's flat. It has not increased, it has not decreased. Marketing spend is increasing as revenue of a company is increasing, but the share of marketing itself is not increasing. So they're investing $1 out of 2 that they make in marketing. So let's go through the math. Let me just go through the math a little bit. And this is grossly simplified math. This is back of a napkin math. Very, very simple. But I doubt much of the FUD on Twitter is really that evolved as well, because I see a lot of fear being spread, and this is pointless to me. Anyways, let me move on. So what is the back of a napkin math? The back of a napkin math is the revenue is what? $208 million. They spend 51% of that in marketing. So they spent $106 million in marketing over the past 3 months. In Q2 this past quarter, they spent $106 million in marketing. What did they get for spending $106 million? They got 91,000 new subscribers. How much do they make per? First of all, how much did it cost them to get each subscriber then, right? How much did we pay for each subscriber? We've paid $1,164 per each new subscriber. That is what I call the grossly oversimplified customer acquisition cost. That's the number. And many people will take this number out of context and will make it seem very scary, right? We're spending $1,000 per new subscribers. That's not good. They'll make it seem very scary. But let's see how much money we make every time we buy, quote unquote, buy a new subscriber. How much money do we make? Well, we make $636 a year in sales, in revenue. And what's the contribution? What's the money that we get to keep out of that? What's the contribution to the overall profit structure of the business? So the average gross profit per subscriber is $510. So we are going to make $510 a year, and we're acquiring that customer for $1,100, right? So if you follow a lot of, real estate investing channel, you start salivating when you see those numbers, right? Because you don't get such high returns just about anywhere, not even in the stock market. Like if you were owning a company and you were showing those numbers on advertising, I think you would likely be at fault to even buy stocks, right? The best use of that money would be to reinvest it in the business. So is marketing an investment, or is marketing just a cost? Traditional accounting, traditional finance folks will have you believe that marketing is just a sunk cost. They'll have you believe there's no benefit to marketing. Never mind that marketing is how the product is known. Marketing is how you build trust with new customers. It's how you build existing trust, and you reinforce existing trust with your existing customers. Marketing is so important. I mean, imagine a company like Coca-Cola. This is a classic example. Coca-Cola, the return on marketing spend is almost nil. It almost doesn't matter, right? They'll do a campaign, they're not going to see any effect on their sales, but they're investing in marketing because it's just the nature of what businesses have to do. They have to stay within the mind share, right? And this is what HIMS is doing. HIMS is investing in marketing, and we have to ask ourselves, do we prefer to have customers, or do we prefer to have that money not spent? And that when that money is spent, you're making a very nice return on that marketing. So let me go through the math. In my view, the wise investor in the 21st century understands the power of recurring business models. HIMS is a business that's likely going to keep its customers for decades. That is why the belief in a company, when you start analyzing a company, you have to begin by liking it qualitatively. You have to like the business model on its own without looking at the numbers. Just look at the value proposition of the business. I feel like I've studied the value of proposition of HIMS long enough to know that the customer that starts in the HIMS funnel, that gets through the door, that customer is going to stay for decades. That is my belief. And compare this to traditional marketing, right? Your traditional industrial aggregator, like say an auto company, for example. So you have Lexus. Famously, Lexus is the company that spends the most on ads. So an example is, let's say, imagine Lexus buy ads in magazines, and they spend, I don't know, $5,000, $7,000 in ads just to sell one Lexus. So you're going to sell one $60,000 automobile, and you're going to spend $6,000 or $7,000 in ads. Well, you're likely not going to get a repeat customer. It's a one-time thing, right? People don't buy cars all the time, just like they buy HIMS. HIMS they buy all the time, every month. You keep buying. You don't do that with industrial goods. And accounting and finance still view marketing as this horrible sunk cost, but it is not a horrible sunk cost. Marketing is an investment in the future. And what is the return? What is the return on marketing spend? Well, we have a range of that return. The return is going to be, so we're spending $1,164 per subscriber, and at best, we assume that every single customer stays, and at best, we're going to make $1,010 in 2 years. That's what we're going to make, and that's 87% in 2 years. So in the 40% each year of return. At worst, we also have that number. We know that retention after 2 years is 85%. So at worst, we're going to make $858. That's 72% in 2 years. So if you reverse that and look at the payback in years, we see that the payback on marketing spend for HIMS is between 2 and 3 years. Now, most often, when people discuss customer acquisition costs, they don't talk about a almost $1 billion a year in revenue company. They talk about much smaller startup and much smaller companies. HIMS is not a startup anymore, contrary to what you would believe looking at the cheap stock price. It's not a startup anymore. This is a company that in Q1 of 2024 will likely be at $1 billion a year in revenue, in run rate, right? You're not selling a new lipstick on Instagram and having a 6-month payback on your customer acquisition cost. This is not this type of business, because this business has tremendous scale. So of course you're going to get a higher return, but this return makes a lot of sense to me. Investing in marketing right here makes a lot of sense to me. And what is the proper comparison of HIMS? What should we compare HIMS to? I've always compared HIMS to a SaaS company on this channel, because the business model of HIMS, when I look at it, I think software as a service. It's a recurring revenue. It's cheap, but you have to keep using it. It's a product that provides a lot of value for you, but you have to keep using it just like any SaaS business. In terms of business models, few businesses come close to the SaaS business, and in general, I'm going to call it the subscription business, right? Few businesses come close to those because you're buying a stream of income for the long term, and in the case of HIMS, I believe it's 10 years plus. So you're buying that stream of income, and assuming we want to compare this to SaaS, we see that for companies with more than 100 million in sales, companies with more than 100 million in sales, they'll typically have a 30-month payback on customer acquisition cost, a 30-month. That's more than HIMS on average. HIMS is not there yet, and HIMS is likely going to do 900 million in ARR this year. Q1 of next year will likely do $1 billion. Right? So it's 10x bigger than this type of business. I think it's wonderful that HIMS has a payback between 2 and 3 years for a product where, in my view, customers are clearly going to stay with the company, keep paying monthly, but they'll add more services and they'll add more product. And again, we can always dream to find a SaaS business this cheap. HIMS has numbers that are very, very similar to a SaaS business, but it is dirt cheap, like literally 10 times cheaper. If you look at price to sales, or if you look at price to gross profits, it's literally 10 times cheaper. It's this business that consistently comes up in my spreadsheet, has the cheapest quality business out there than someone can buy, along with Stoneco, a Brazilian fintech. I don't understand why this stock is so cheap. I really, really don't. It doesn't make any sense to me. This stock is so cheap. So a good question to ask is, so HIMS earns about 4, if you compound it, right? You backtrack the compounding to take it back to 1 year. So let's call it about 40%. HIMS earns about 40% a year for every single marketing dollar that it invests in itself. And the question is, would you take that bet, right? And I could make sense that if you have a wholly owned company, it's a private company, you own it, and you see those numbers, those returns on your marketing, well, you should probably not own any stocks or any other investments, and you should probably just invest in your own business. And that's something that entrepreneurs will often say. Entrepreneurs will often say the best thing for me to do is to keep investing in my business. None of this is advice, by the way. There's no advice here. But what else do we know? Would you do it? So would you do it for 40% a year? Would you do it, first of all? And then would you do it for 40% a year, knowing that you have retention 85% after 2 years, meaning that 40% return, yeah, it's going to lower a little bit year after year, but you'll still have a good chunk of it still around 10 years from now. And would you do this? Exactly, knowing that, yeah, many clients that started early on with a company, like very early, the company got started with ED, the very early on clients that got ED. We know from the calls, from the multiple calls, the CEO and Yemi has been very candid about that. They have plenty of customers that are still paying for their subscriptions 5 years later, and that they have no intention to stop, right? They keep it on. And then now add the potential of upsell opportunities. So you have 1.3 million people who are used to receive treatment from HIMS in the mail that are going to be presented with opportunities to add more products and add more products, provided that they need those products. So there's a lot of upsell opportunities for HIMS down the road in the future. This is a story of long-term thinking. If you believe in this business, if you have a fundamental qualitative understanding of the business, the mission, the business model, then you will view marketing as a good thing. Because, and this is another thing to keep in mind, businesses have a lot of inertia. I always say this on the channel. Businesses have a lot of inertia. If HIMS stopped advertising today, the profits would literally go through the roof. This is a company, if HIMS stopped advertising, they would probably have a net profit margin around 50%, like a Visa, for example, right? That's how profitable this would be. This is a company that invests in marketing because it wants to grow at 80% revenue growth each year. That's why they invest in marketing. But if they stopped investing in marketing, this would be a business that would probably have a call to all of the value investors out there, because people would realize, oh, wow, this is such a profitable business and you're not spending to grow anymore. But they're not in that mode yet. They're not in harvest mode. This is a company that has a vision. They're going after a multi-trillion-dollar market. They are inventing healthcare. As I say it, perhaps provocatively, but they are inventing healthcare. They are treating people in their late 20s, their early 30s, before the big issues come up. That's what this company is doing. They're creating convenience, right? They're creating the buy it now button for healthcare cheaper than your copay. That's another way I would describe him. So this is a company that has a fundamental vision. And if you listen to the calls, you listen to the CEO, go on their website, look at the videos that they posted, you see that this is much more than an ED drug company. Also, if they made a bunch of money, they would be paying a ton of taxes. And perhaps even more important, I really, really doubt Mr. Market would give HIMSS any credit for profits. I really doubt it, because when I see the stellar Q2 and the stock got punished by closing down at the end of the day after a stellar Q2, literally a stellar Q2, this is not a stock that's trading on fundamentals. This is a stock that's trading on popularity. And that's it. And it's unpopular right now because there was a lot of fear circulating on Twitter regarding marketing. And so that's why it's so cheap. So my conclusion in here is a few final considerations before I do my conclusion is HIMSS, and this is an important point of marketing, and I should really develop this in another video because this is true for all businesses. But when you think about marketing spend in the modern world, right? You know, if you drive in any typical US town, you'll see how marketing used to be. And marketing used to be you buy ad space, and ad space was always available. And still today, drive down the highway, you'll see ad space everywhere. And it will be just ads and after ads after ads after ads. There will be ad space everywhere. This is not how advertising works in the digital world, because in the digital world, advertising is limited by the number of pixels on your screen, right? And you can't have unlimited advertising on a phone because obviously you wouldn't be able to read it. So there's limited real estate in advertising online, which is where HIMSS does the bulk of its advertising. The same is true for TV, by the way. Which means that it's a winner-takes-most game. Advertising digitally is a winner-takes-most game. So not only do you have the advantage, of course, of acquiring customers, but another thing that you do when you advertise online is that you deny the ad space to your competition. That makes sense. I wonder if it makes any sense. But you deny ad space to your competition, because unlike driving down a street somewhere in the US and you have thousands of ads. If you read these statistics, there's thousands of ads that one is subjected when they drive, right? There's always going to be ad space for someone to buy. This is not true on, say, Facebook or Instagram. Facebook or Instagram, you scroll, and the ad that you see is the highest bid. It's the highest bid. And if it's HIMSS denied that spot to another company. That make any sense, right? That's an important fact of marketing, and I'd be very interested in developing this in another video. You know, and you're also driving marketing costs up for all of your competitors by bidding up. So sometimes buying premium marketing not only has advantages in gaining new customers, but it also has advantageous in denying the competition any access to prospective customers. And I would much rather see them invest their money, their profits in marketing, than I would want to see them say, I don't know, put them in T-bills where the money just melts in the face of monetary printing. And that's the name of a channel, right? Beat the denominator. I don't want them to have cash. I don't want them to make a lot of profits. I want them to develop a network of customers, a network of doctors, and that in itself has intrinsic value. It is not like just dollars sitting on an account. In sum, HIMSS Please double down on ad spend. I don't have any problem with that, and I think it's the way modern businesses grow, and sometimes our traditional finance doesn't keep up with this. Just baffles me. Customers are more important to the mission than profits, and that's true right now. And in my view of investing, and in my view of the world, it's likely always true. That's how businesses win. I would rather own share of a stock that makes customers happy than I would like to own share of a melting ice cube, which is the US dollar. So anyways, this was not investment advice. This is just entertainment. I hope you were entertained. Appreciate your likes. Appreciate your subscribes. Have a wonderful day. And I hope you liked this little bit of a different video today. Thank you for watching. Have a great one.